Hello, good afternoon, everybody. So I hope you're having a good afternoon. Today is 9th of December. So today's webinar is one of the most important webinars. Like we're going to learn one technique which, if anyone can learn, they can at least make something trading. So so far, most people are only aware of horizontal levels, like the one I've done on my screen. Most of us are only aware of horizontal levels. That is, you pick a line, you put it there. You pick a line, you put it there. You pick a line, maybe you put it there. Pick another one, you put it there. Then you wait for price to get to these levels before you can trade. So these are known as the horizontal levels. They're the horizontal support and resistance levels. These are the ones that are there on the traditional trading. So if you're looking at the books, you'll get this. Books also talk about the one I want to talk about, but I want to look at it a bit different from the way the books put it, because from experience, it's actually something else. When you're doing trendline trading and when you're doing horizontal level trading, there are two different things. So that brings us to the topic of today, which is known as trendline trading, how to draw your trend lines correctly. So what is a trend line? What is your trend line? From your experience, what is a trend line? A trend line is basically a diagonal level. It's not the horizontal one. A trend line is anything which looks like this, it looks like this, or it looks like this, or looks like this, becomes a trend line. It's entirely diagonal, not horizontal in nature. So first of all, there are two ways to draw trend lines. You can draw trend lines that is touching basically the tails of candles, and you can also draw trend lines which is touching only the bodies of the candles. So I will start off with where you are drawing trend lines and the trend lines are touching only the tails of the candle. Okay, look at this. You have a point here, so you draw it in a way that it touches just the tails. Just a second. You draw it in a way, look at it like this. So we'll have a resistance level at this price. We have a resistance level at this price. We have a resistance level at this price. We have a resistance level at this price, and we have a resistance level at this price here. Then on the lower side, we have this one. So this is basically touching even the bodies of the candles. But if you extend it like this, you can see what I'm saying. There is this. We have a support there. We have some support here. We have a tail touching this resistance trend line, the supportive trend line. And then you have a tail touching this. So you can see that from sometimes in the past, this is from 2018, the price actually has been remaining within this trend line, the up one. So this is like an expanding wedge formation, two trend lines coming together to form an expanding wedge formation, which means as we move into the past, the wedge keeps expanding. It's expanding from this point up, 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 and then this one also extends to the lower side. So if you want to trade trend lines correctly, if you want to trade trend lines in the correct way, please avoid cases where you're only seeing one trend line. Ensure they're acting in pairs. That is, if either the two trend lines are expanding in nature, like they're doing now, or they're converging like this. So you'll find that the price is inside this trend line. It goes up, it comes down, it goes up inside the two trend lines, and then it comes down, then it goes up, and then it comes again down before it eventually breaks below. So it's really good to trade a single trend line like the one you're seeing now. It's really good to trade this as a trend line. But cases where you find that the two are actually the same, that is, two trend lines coming together to form the same shape, like maybe a converging wedge formation or an expanding wedge formation, those are always the correct instances to look for a trade. These are the only cases where trading a trend line becomes really good and very useful. Although even when there's one trend line, it can still work, it's still good. But if you learn how to pick trades when there are two trend lines working together, then those are the cases where you'll make the most money. So I'm not saying this out of reading from book. This is from real life experience. When you have two trend lines showing the same thing, those are always the ideal time to look for a trade. You'll always earn a lot when you trade trend lines that are two. Let's look at another example. Here's the JPY. So when you look at this chart like this, you may not see clearly whatever I'm saying, but you go to daily chart. So on the daily chart, we draw based on this tail. We want that tail to run down and touch the others. And then you also have another one. So you can see that in this case, the trend line which I'm having is actually touching part of the bodies. It's still okay, but there's the upper one. This is a resistance level. This is a resistance level. This is a resistance level, and this is a resistance level. Then on this lower side, we have a support. We have a support. We have a support here. So as it is now, we want price to come back to this point before it can continue to the lower side, which means this remains to be a good place to look for a trade from. This is a very good place where you want to look for a sell from. If you're on this chart now, this is a good place where you want to look for a sell from. So technically, just sit back and watch for price to reach this level so that you can pick a sell position when the price gets to that point. So as I said with the first example, you can see that even in this case, the trend lines are working in pairs. There are two. There's the first one, there's the next one. So while this is true, that is, while you continue to see price sustained within these two trend lines, then these areas becomes a very good place to look for trade from. So when the price gets to this point, you pick a sell. When the price gets to the lower trend line, you pick a buy. When the price comes back again to the upper trend line, you pick a sell, until the day that the price closes above this point and you begin to see sustenance above the upper trend line. That's when this trend line becomes invalid. Does that make sense as at now? So what I'm trying to drive home with this is that do not trade trend lines that occur single trend lines. Do not trade single trend lines. Trade trend lines which occur in pairs. Avoid those trend lines which are happening alone. That is one trend line showing you the same thing, then you start trading just based on that one. Trade those trend lines which occur in pairs, that is in two. Let's get another example. So we have this trend line, and then you have this. So you can see that this is like a shape. This is like an expanding channel formation. No, like a rising channel formation. You can see how good the price is held within it. The price is being held. The price is being held. The price is being held. You have a support. We have a support. We have a support. So this means we could have taken a buy from this point, and we could have taken a sell from this point. If you took a sell here, the price actually went down. It came back up before it continued down up to the support. So this was a good place to buy from. This was a good place to sell from. This is a good place to buy from, expecting price to go up to the same trend line at the very top. So I hope that clears things up. Let's get the next example. Okay, this could be a good example of wedge formation here, and then you have this. So look at what I was saying, that these two are working in pairs. So we have this, support there, we have a support there, we have a support there, we have a resistance there, we have a resistance there, and we have a resistance there, then we have another resistance there. So this candle, the red one, opened here and closed below. The fact that the price closed below this level is a very good sign that we've now broken below the shape and that we are now sellers. So this was a good place to look for a sell from. If you have two trend lines coming together to form a wedge formation, when the price breaks below that wedge, the next candle which appears after the break is indecision candle. That is always a good time to look for a sell. It's the best time that anyone can be looking for a trade. So if you have a wedge like this and the price has gone below that wedge, the next thing it forms is an indecision candle. That's a good sign that we are sellers. So you're supposed to pick a sell position, expecting price to proceed even lower. The next chart, the next example. Let's see. Okay, this is another case where the price is forming only resistance trend line. We have a resistance there. We have a resistance. We have a resistance. Let's see if there's a trend line at the bottom. Yes, this is a trend line here. So these are the cases where trading trainers looks really good. If you find a place where there's only one trend line, there's only one trend, either the resistance trend line or the supportive trend line, and you start to trade that alone, it becomes very dangerous. Trade only in places where there are two. That is where two trend lines are coming together to give the same thing. So in this case we have two. Another example. This is another trend line. There's this, and then there is this. So the price was being contained within this shape formation. Then eventually the price broke above. So after this breakout, this is a good place to look for a buy from. The next example, we'll look at a different chart maybe. So look at this from this point here, and also from this point. So this up to this point here, this trend was holding price correctly. Then the price closed above. The next candle was indecision. Then instead of price continuing up, it actually came back down. So this can happen. Sometimes you may have two trend lines happening. The two trend lines are giving you a very good shape. The price breaks above or below that trend line, but somehow it does not continue in that direction. Don't worry, because when the price breaks again the second time, it's likely to continue in that direction. Like in this case, we had a buy here which failed to happen. Then the price broke below, the price continued down, it came back to the same place before eventually it went down. So this was a good place to look for a trade from. If you are looking at this chart, that could have been the ideal place where you want to look for a trade from. So trend line, yes, are really good, but sometimes it may fail. So it's better to trade when there are two, because when there are two, it's highly likely that a breakout is genuine. So when you have two trend lines, that's when you have like these two trend lines and the price breaks above or below the trend line, the breakout is always genuine when there are two. If there's only one breakout, it does not make sense. So the next example, I meant if there's only one trend line, it does not make sense. A breakout may not mean actually a breakout. This is not a good one. Let's get another one. So we have this and we have this. So look at how these two are holding price. Like the price was within, we didn't reach that point. The price was support, then there's this breakout. So the price came back up to this point, went down. As we're speaking now, the price has come back to the same place. So this is a very good place to look for a sell from. This is a very good place to look for a sell from. If you sell it here, your take profit will go up to this point. So you'll basically just come here, pick a sell position, have your stop loss above there, and then have a take profit here. Here, or you could have it here. Either way is still correct. So that is how you trade trend. That's how you draw your trend lines correctly. Ensure that whenever you want to trade trend lines, there are two, not just one. So thank you very much. That should bring us to the end of today's session. I will meet again next week at the same time. So thank you. See you.